Good day. Ira Epstein with your financial market wrap-up, your weekly edition for this post July 4th, which is Friday, July 5th, 2024. Exciting weekend in Chicago, NASCAR races, and yes, I will be going on Sunday to see the race. Can't wait to do it. Love car racing. And we've had a lot of information. Now, this was the week of jobs. But before I get all into that, and I'll come right back to that in a minute, I do have to remind you that our 35% sale is ending. You got about 48 hours left. It's over on Monday. So, iraepstein.com. When you get there, if you go to courses, all my charting courses are there, the full charting course, the outside day course, the enhanced Bollinger Band course, all 35% off. And if you go to research, you will see my one-year research programs. And when you go to any of these and choose them, please understand, you'll see the retail price, you put it into your cart, just click that you want to buy it, and what takes place is then it will show up with the discount included in it, okay? So take advantage of it. It's going to go away, and then my next sales won't be with 35 off. That's going to be a problem for some. All right, let's take a look at the next event that we have happening. On Monday, we're going to get consumer credit issued at 2 o'clock. That's not a very important report. Today's report centered on all this. This was a very important day. Number one, we saw that they expected 200,000 jobs. They got a little bit better. But when you drop down, last week's 272,000 jobs, I'm talking last month's jobs, dropped by 54,000, and they dropped by about 55,000, the April number. So those big numbers suddenly shrunk. So when you do a 3-month moving average, you get a whole different picture on what's going on. Then just drop down with me. Because I looked at the average hourly earnings month over month, and yes, they're going up, but they're slowing each and every month. That's very important. Same here, that you're looking at the hourly earnings year over year, and that was down as well. And then I come over here to the unemployment rate at 4.1%. Well, that's getting probably exciting to the Fed because they wanted to see that higher than this. You know, they were projecting at year end 4.1%. So here we are in early July, and we're there already. So good shot that we'll end up with a higher number than that if the trend continues as is. Labor, big win in the UK, a major sweep. And remember, you have in the markets over the weekend on Sunday, the French vote. And these can be wild turns for the governments in both countries. All right, just remember the sale there. And by the way, if you move your cursor to the top anywhere here, you'll see an icon if you're on a PC. Give that a click and you'll be right with us on the home page. All right. So as you can see, a little bit of a pullback on the energies, both on the gas. But remember, the markets were going up into the fourth on the gasoline. This is a different story. Why did you get weak there? Because Israel and Hamas seem to be getting closer to a deal. Hamas late today, this afternoon, has said they will accept a 6-week truce fire without a full Israeli pullback. But you know as well as I do, they say one thing, and then once you get into the details, it falls apart. The good news is Israel has sent a delegation to Qatar to see how real it was. They went there. They returned home already. We don't know what they were told, what they've said, what the deal is. But the market, you know, these things have a way of leaking. The market thinks there's something good happening there. In the bonds and notes, we had a good-sized rally. Why? Because the government is, well, not, I shouldn't say it that way, because the Federal Reserve has ammunition now in the first, if you will, you got a 6-gun, you pull it back, you got your bullet in there. They've had weaker, I want to be very careful with this, weakening could be a good word, jobs. Now we're going to get CPI and PPI to be certain that the month of June was weak. If it is, I have been consistent saying I think they want 3 week periods. So if you have June week, and July and August, that gives you time for the September meeting, and there makes it a live meeting. So you're going to see percentages on that have shot up for that. It all gets shot down if CPI and PPI come in hot. If they come in steady to lower. One shot out of the 6 gun. You got 2 shots left to go. Let's see if we get it. The market won't wait for all that. It's going to get excited if you start seeing the weakening. What happened with that news? You kicked up the metal market sharply. What else has happened? The dollar went down, and stock indices, with the exception of the Russell, all in the toilet. So let's go to the chart action and see what we've got. This is a monthly area chart of closes, and this is the highest monthly close you've ever had. You're staying well over the 18-month moving average and have since 2023. So I use that as a bias to the upside long term. Then I look at the same thing on the weekly charts, and you can see you've stayed over that. That keeps my bias on a weekly chart bullish, which means on a closing basis, the most I'm looking for in corrections are to get back to the 18-week average to try to hold that. That's the most. Doesn't mean it's going to happen. We then take a look at a bar chart of just the weekly charts, okay, and we see that we've got a pattern of higher lows, higher highs. Now, the importance is you have an outside week to the upside. If you've taken my outside day course, you learn the importance of that. I'm not going to go over that here. That is why you're getting a 35% discount offer. You get outside moves on charts often. They're an important pattern. They're either a continuation pattern or an end of a trend. I'm not going to review it. I just don't want to see this low taken out. I'll leave it at that. Of this week. Same thing when you're over here. You're over all the key moving averages, so the averages are lined up bullish, and the resistance is right at the upper Bollinger Band, which you've hit 4 or 5 times in a row. That means you have what I call the gorilla glue trade at work. That is when you keep hitting the band, you get over it, you pull back under it, and what it does is it draws with it the momentum of the market higher and higher to the point where it gets embedded or locked in. Locked in occurs when the slow stochastic has both numbers over 80, and it does it several weeks in a row, which this market has done. That tells me on pullbacks, the market is going to be a buyer. It fights with the outside day up if it drops too much, because there's a target that sets up if that low is taken out this week or next week. So it's a warning signal with that. When you come to the Dow, the momentum is pointing up. However, the swing line has got lower highs and higher lows. I don't see a trend out of that. And if you look at the Bollinger Bands, the black dashed lines, what do you have here? You have a market that is sitting in a sideways pattern, a churn pattern. Now, eventually, you're either going to hit that up and break out to the upside and keep pushing it to the upside, or go down to the lower band, hit it, and start pushing it. That's how you come out of these tight bands, just the way you did here. It's one way or the other. And yes, you can get a false move like that and then come back the other way. You got to be on your toes because the momentum's building in that pattern. In the NASDAQ, this is again the gorilla glue trade with the embedded reading. Unlike the S&P, this particular market has gotten itself what? No outside day. Number 2, if you go back and you look at the Moore Research Center, that's what I use for seasonal trades and futures, and you take a look, if you were a buyer on July 1st and got out at the end of the month according to their data, out of the past 15 years, it has won 15 of the times. That does not mean the 16th year will be a winner. I would have said it doesn't mean the 15th year or the 14th. There's no way that you know the future. You're looking at the probabilities of what has happened, what physically has actually happened, and you try to use that as a tool, but not the tool. And that just tells me that on good breaks in this market, even more so than in the S&P, this would be my favorite market to buy because of what I've just told you in the combination with the embedded reading and all this. Then the weakest of them temporarily is the Russell. It has been stuck in the sideways action of the 18-week average of closes, narrow Bollinger Bands, trend down with lower highs, lower lows, but you don't want to take out last week's high. If that's taken out, that becomes a problem because that could set you up all of a sudden with higher lows and a higher high over there, and suddenly you're looking at going back up. It's been pretty interesting that the other markets have set records and this market refuses to join. It doesn't have any of the IT main companies in it is the problem. Supermicro and others were taken out. So it's got none of those plays. The other markets have something going for them. Not so much the Dow, but it's got some companies that are very important still in computers. When you take a look at the 5-year notes, well, the market's got a lower low and a higher high. It's overbought. I consider any reading on the slow stochastic over 80 overbought, and it has a lot of resistance coming in at 111.20.5 to 111.17.5. When we take a look at the 10-year, it's the same pattern, a lower low, higher high. Look at the resistance there, same thing. Then we get to the dollar, which just turned bearish. So this is the week where the market turned bearish. The number it had to close over also was 104.59. Let's call it 104.60 and 104.77. And now what you want to see is the 18-week average get under the 100-week, and you get your bear pattern calling for a potential move back to the lower band, momentum turning down. This market for the first time has joined the bear pattern, and the risk is not to take out last week's high. In the eurocurrency, it's the flip-flop. You got higher lows, higher highs. Now the market's saying it might be going back to the 109.61 area. The support in the market, 108.47, and you don't want to take out last week's lows. When we look at the Canadian dollar, suddenly it, too, has joined the bullish move against the dollar with higher lows, higher highs. I say the pros are going to buy this market near the 18-week average, and they don't want to see this week's lows taken out, and the objective could be the 100-day average in the upper Bollinger Band. In the Japanese yen, it still looks bearish to me. The market's got lower highs, lower lows. I still can target 100 points lower than this at 61.87. The Bank of Japan does not meet until the end of the month. I think today they tried intervention in the market. It didn't hold up very well. In Bitcoin, market's coming down. I was watching today CNBC and Carter Worth and how they were trying to find a way to pick a low in the market even though the trend is down. I'd rather they do that than me. Lower highs, lower lows. You are under the Bollinger Band, so the odds of the market staying under that are only 5% of the time. Carter did point out that we've had a series of breaks since 2023, and most don't go much beyond 20%. This one's 27% in size that he was measuring. Okay, I respect him certainly as a chartist. He talks in the broad swath, and I like that. But what I don't like is these guys are always trying to come in at the low point or at a high point, and it's not my cup of tea at all. When I look at Brent WTI crude, higher high, lower low, don't see much there. And by the way, when traders like that step in, if a trade goes bad, well, it's an investment. You're either a trader or an investor. If he's talking as an investor coming in, I get it. I get what he's saying. That makes sense. You're trying to buy on the break and just build a position over time. That I agree. But as a trader, the trend is down. Why fight it? Brent. Lower low, higher high, okay. Still in an uptrend, even though the market backed off because of the a hope for peace. And we all hope that there's some peace there. Who doesn't? Lower low, higher high, not seeing much there. Gasoline, this is your resistance area. The 18-week average of closes pulling back into support of the 100 and void of a trend right now. Lower low, higher high. So I always look at that and try to put 2 and 2 together. So the way you put 2 and 2 together is simple. You take 100%, you take 35% off, and you're paying 65% of what I normally charge for my courses, my research. IraEpstein.com, or move your cursor up here. I'll catch up with you all Sunday. Take care.